New home listings fall to record low 15% as sellers become increasingly hesitant. Guys, this is a great article. If you're looking to buy a house, you're not going to like this article because it's outlining something that's really, really interesting, which is the truth is that we are dealing with record low inventory, guys. That is the biggest problem right now with why the bubble hasn't popped and it's not popping that fast. We are seeing the prices come down, don't get me wrong, but one of the things that's keeping prices high right now is basically the lack of supply. Supply. Why do we have a lack of supply? Well, let's read this quote right here and we'll jump right into, I'll tell you how I feel about it. But basically, sellers are coming to terms with the fact that volatile mortgage rates have dampened demand. Some sellers are pricing lower, and some homeowners are staying put because they're nervous they won't get a good offer or they're hesitant to give up on their low mortgage rates. Because the number of homes for sale is no longer rising, buyers' newfound bargain power is reaching its limits. It's worth noting that early demand indicators such as tours and requests for help from agents are elevated from their June lows and remain steady. So there is a pool of interested buyers out there, not sellers, but sellers need to price fairly to attract them. If more sellers and buyers find middle grounds on price, we could see sales strengthen a bit. So basically, like I said, we have an inventory issue, and it is really it's keeping the sellers, sort of happy right now because it's not making the prices drop that much. What I like about this is where she says right here, people are hesitant to give up on their low mortgage rates. So what does that mean? That means if you bought a house, let's say 10 years ago for $250,000, okay, 10 years ago, $250,000. Now it's worth, let's just say $650,000, which is a lot of money, right? You more than doubled your money in 10 years. If you refied last year, you know that your mortgage rate dropped by quite a bit. It dropped pretty substantially. Now, yes, you are sitting on record profits right now. Remember, you started at 250, it peaked at 650, maybe it's down to 600 or 625 or whatever. You're still sitting on a huge profit right there. There's a lot of equity. The issue is you just refinanced and now your payment's even lower. Do you want to sell or do you want to hold, right? That's the issue. People are deciding like, hey, I'm in at a good place. I do not necessarily need to sell right now. I don't need to. It doesn't really matter. And that's what's happening. So again, the whole story here is that people are super duper scared with inflation and recession coming. And anybody who got into a house, they refied, they're okay with their payments, they're not motivated to sell because where are they going to live, right? Remember, inflation, buying properties is a great hedge against inflation because the money is safer on the property than it would, in your bank account. So a lot of people are just not that hesitant. They're just not in the mood to sell, right? Now, check this out. What can motivate people to sell? That is the question that we need to ask ourselves because we know we know how the game looks like right this second. But what is it going to look like in a few months? Well, in my opinion, what it's going to look like is basically we are going to see possibly GDP not grow, right? It's going to spook the markets like crazy. We might see a not so strong holiday season, which is going to spook the markets even more, maybe even causing layoffs. Once we start seeing the stock market sort of crash and it goes into a free-for-all situation, we then at that moment could start seeing layoffs. That is what motivates basically people to sell their house, especially if the market is still somewhat hot, right? Because people say, hey, I need the money, whatever, I'm going to downsize. They all kind of figure it out. But that is something that could happen. Basically, the only way to get the housing prices down is, unfortunately, the saddest part here is that we probably need to see high unemployment for that to happen. And right now, our employment is pretty good right now. It's pretty stocked. And again, with the situation that we have at hand right now, with the low supply and high employment, we are definitely seeing those prices stay high. But again, it's a bubble. We are in a bubble. I believe the bubble is going to pop. I believe it's going to pop real soon. But again, it's a moving target, and we need to just be vigilant and see how it all plays out. Now, I'm gonna go ahead and have a link to this article down in the description below. So if you guys want to jump in and watch it and read it for yourselves, go ahead. Now, I'm gonna go ahead and finish this video. I want to say a big thank you to everybody who has been supporting my channel. You guys have been awesome. You guys have been leaving comments. You have been liking my videos, and it feels really good. Thank you guys so much. I owe you guys so much. Now, if you're new to my videos and you like what I have to say, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.